Good morning, everybody. Good morning to all you magnificent melonheads out there, and happy Wednesday. Today is August 9th, 2023. Big story this morning. Deflation. Say it ain't so. Deflation. What? But Jack, we have inflation. The price of everything has gone up. Prices have risen so much, the cost of living, it's outpaced my wages. Life got so much harder. Yes, I know. When I talk about deflation, it is not meant in any way to belittle the hardship that inflation has inflicted on the world these last 2 years. But the key point to remember is that inflation and its opposite cousin deflation are a rate of change. Inflation and deflation are the rate of change of price, not price. And the rate of change of price has declined significantly as prices have continued to rise, but they have risen slower. And as we've been watching this whole scenario play out over the last few months, really since about January, I've been warning that deflation is coming. The Fed has been cranking the screws to the economy, raising interest rates, trying to put people out of work, trying to slow down the tightness in the job market, which is kind of a myth. The job market isn't really that tight. And I've been warning that, guys, inflation is going to keep coming down, but it's not going to stop. We're going to get to the Fed's 2% target. We're going to go below that. We're going to get to zero. We're going to go below that, and we're actually going to go negative and actually see negative prices. Now, that has not happened yet. We have had some month-over-month negative prints of negative 0.1% in the index, but we haven't had a year-over-year negative number yet. We get a CPI print tomorrow, which I will be going live at 8:30 a.m. tomorrow morning for the Consumer Price Index. Hard to tell what that one is going to do tomorrow. It may actually come up higher. As Warrior Lady has pointed out in some of the comments here on this channel, we've got the base effect is going to play a role in tomorrow's CPI print, because there was a point last year where inflation leveled off for about 3 months, and those data points are going to start dropping off of the year-over-year comparison, and that will have the effect of making CPI appear higher than it actually is. So that will partially offset the decline in inflation that we've seen. But in China, there is no inflation anymore. China is officially in deflation. China, the world's factory. Remember, guys, 90% of the crap that you buy, whether it's Amazon or Walmart or Target, it's coming from China. They make almost everything. And both the consumer prices and the producer prices in China came out last night negative. Negative year-over-year growth in the prices of both. Now, I was talking a lot about China, especially in 2021 and early 2022 when the Evergrande collapse was happening. And I was saying back then that there were two massive forces at play in the global economy. You had the unbelievable expansion of the money supply in the West that was going to cause inflation. That happened. And that we also had this massive deflationary collapse going on in the real estate market in China. And that problem was really so big when you look at the numbers, and I've talked about this. I talked about this at the Silver Symposium last year in Spokane, Washington. By the way, check out the link down below to the Silver Symposium in Las Vegas. I warned about how the collapse of the China's real estate market would be so deflationary, it might actually outweigh the inflationary forces of monetary expansion in the West. Now, that's been very slow to play out, but it's starting to play out. And now Evergrande, which is still clinging to life somehow, and their $300 billion debt pile that they've defaulted on. Now we've got Country Garden, who was even bigger than Evergrande. Now they have a $200 billion debt pile, so a slightly smaller debt pile. But Country Garden has way more projects. That's a much bigger outfit. They build more buildings. So Country Garden is going to be a bigger hit to GDP if they go under. And it's not looking good for Country Garden. Keep in mind, guys, China is this insatiable beast. More than half of all of the concrete, steel, copper, everything, all the materials to build all of these massive cities in China that nobody lives in. They just keep building them. They're like the Doozlers from Fraggle Rock. They can't help it. They just keep building economic growth at all costs. Never mind the fact, do we need this building? Do we need this train? Who cares? Just build it. GDP numbers must go up. That's been the attitude in China for decades. And they built all this crap that nobody needs, and now the bill is coming due, and whoops, none of these assets we've built, none of these buildings we've built, they don't make any money, and we can't pay for the debt. And it's all coming down. And it's starting to reflect broadly in the economy in China, a slowdown in producer prices. Hey, as they stop building buildings, as they stop building cities, go figure, concrete, steel, and copper got cheaper. And now they don't need as much, and that's making it cheaper to build all the other stuff. It's putting downward pressure even on consumer prices. And speaking of deflationary forces, how about that strong jobs market, everybody? By the way, welcome to everybody who came over from the Real Estate Mindset last night on that video I did with Travis over there about the myth of the strong jobs market. And lo and behold, last night we got the story that ZipRecruiter, you know, the recruiter, they find people jobs, they hire job postings, all that stuff. They've withdrawn their guidance for the full year, citing a decline in job postings and employers willing to pay for them. There's your strong jobs market, a company whose job it is to make the strong jobs market thing work. They just pulled their guidance because their earnings are in decline, and that decline is speeding up. They don't know how much it's going to decline, so they're not even going to try to guess how much money they're going to make this year. Does that sound like a tight labor market to you? Does that sound like a strong economy that's going to have no recession and a soft landing? When the people who find work for people are saying nobody wants to pay us, hardly a good indicator. So throw that one on the pile. That includes China going belly up and their property market collapse and the commercial real estate bubble. Speaking of the commercial real estate bubble, wework basically threatening that they're about to file for bankruptcy. Whenever you hear a company say that there is a going concern, that means the concern is they are going bankrupt. WeWork announced that yesterday, that all options are on the table. Again, the signs of a desperate company. WeWork was this big, innovative tech company, shared workspace, the gig economy. At the end of the day, it was just a commercial real estate investment trust. That's all WeWork really was, with an app attached to it. Just an extra layer of expense. And of course, they're going belly up because people don't need as much commercial real estate anymore. Again, deflationary forces are everywhere in this economy, and they are not going away anytime soon. And with that, we are going to shrink my big melon of a head. And while we talk about deflation, won't you please inflate that like button? And if you're new to the channel, won't you please hit that subscribe button? We do this every morning, everybody. So come on back and see us again tomorrow. The CNN Fear Greed Index still deep into greed territory at 69 this morning, down off its recent highs in the extreme greed territory. We've got the S&P is down just 2 points. I was talking to my moderator, Mish. I said, are we going to go with the bull or the bear for the thumbnail today? The indexes were just in the green, and I said, you know what, let's go with the bull because the indexes are still green, and of course they're red right at the open. Just to mess with me, we've got the Dow is also in the red, down 15 points. Well, now it's flat. I don't know what happened there. It just went from down 15 to flat. 35,314 on the Dow Jones, and the NASDAQ is down 25 points or 0.18%, 13,858. For the tech-heavy NASDAQ, looks like it's selling off at the opening bell this morning. By the way, let's take a look at the NASDAQ, guys. I want to zoom in on that candle from yesterday because we had a pretty big sell-off at the open yesterday on that announcement of the bank stocks and the downgrade from Moody's, and there was a lot of struggle. But you know what? The market bought back all day long. You notice we had that big sell-off and then just a slow grind higher. Some people are saying it was the Plunge protection team. Some people are saying it was the algos or the dip buying bros. Whatever it was, the market bounced off those lower levels. The NASDAQ came down just above that 50-day moving average and then rebounded. So the market actually showed a pretty strong rejection of those lows yesterday. Not saying the market is going higher here, but that candle looks pretty nice. NASDAQ looks like it's wanting to turn. The DXY, meanwhile, is down 13 basis points today at 102.4, still well off its recent lows. Stronger dollar continues. Looking over at the bond market this morning, we got the 30-year is down 2.5 basis points at 4.16. The 10-year is just over 4%, down 2 basis points. That is off its recent highs. The 2-year, 4.76. That's modestly higher today. And the 1-month yielding 5.37%. It is free money over at the U.S. Treasury for a 1-month Treasury yielding almost 5.4%. Looking at commodities, we got gold is lower again this morning, down $2 at $1,957 an ounce. Silver, my favorite of the shinies, at $22.77. That's down 4 cents. It's been a rough couple of weeks for silver. WTI crude is up 85 cents or 1% at 83.76. And speaking of silver, guys, I will be speaking at the Stock Pulse Silver Symposium in beautiful Las Vegas on September 29th to October 1st. This is my second year doing this event. This is a fantastic event. All your favorite financial YouTubers are going to be there. There's just 51 days from now before this event starts. So I've got a link down in the description below. And as soon as this stream is over, I am going to also post a link in the comments and pin that baby to the top. If you use that affiliate link, you will get 10% off of your tickets. Come see me at the Silver Symposium, guys. I love meeting viewers at these events. If you see me at the event, I want you to walk right up, shake my hand, let's have a beer, and let's talk markets and finance. I love getting these little snapshots of what is going on around the world and all the different industries everybody's working in. It's part of this mosaic that comes together. I always meet wonderful people at these events, so I'm really looking forward to meeting you guys in Vegas on September 29th. Check out that link down below. Now let's get into the meat and potatoes of this bad boy, China and deflation. This is in Bloomberg, dated this morning. China slides into deflation as consumer and factory prices drop. Yes, in the 2020s, we're actually talking about prices dropping. Can you imagine that, guys? Consumer and factory. Now, it's in China. It's on the other side of an ocean. But like everything else that happens in China, eventually it ends up on a boat and it comes here. And I think deflation is the same way. Consumer and producer prices both declined for the first time since 2020. And officials say the CPI contraction, it'll likely be temporary. We're going to talk about those officials in just a minute and why they might be saying CPI contraction is temporary. Put a pin in that one. China slid into deflation in July, adding pressure on policymakers to step up monetary and fiscal support, even as signs that the decline in prices is temporary may limit any stimulus. Again, these temporary prices, guys, you got to love all this temporary stuff. Okay, moving on. Let's talk about this one here. The Statistics Bureau attributed the decline in consumers' prices to the high base of comparison with last year, similar to what I was just saying about the base effect playing a role in tomorrow's CPI report, which I'll be live streaming, saying the contraction is likely to be temporary and consumer demand continued to improve in July. Well, that sounds optimistic. With the impact of a high base from last year gradually fading, the CPI is likely to rebound gradually, said Dong Lijuan, sorry if I mispronounced your name there, buddy, chief statistician at the NBS, that he said in rare additional comments to accompany the official data. So their statistics guy, right, the statistics chief of China, he says, don't worry, it's only temporary. Well, that's very reassuring, right? Isn't that reassuring? Oh, maybe not so much. Check this one out in Zero Hedge. China bans negative economic commentary and mentions of deflation. And you know me, I just can't help myself. If China says you can't say deflation, well, I'm going to go ahead and say deflation, deflation, deflation as many times as I damn well want. You got to love these Chinese Communist Party guys. They are so predictably treacherous. Oh, the economy's bad? Just arrest and imprison anybody who says it. And poof, the economy is good. The economy has no clothes. That's what it is. Check this one out. 7 well-regarded economists told the Financial Times that their employers had told them some topics were off limits for public discussion. The China Securities and Regulatory Commission, the stock regulator, has accused brokerage analysts of playing up risks facing the economy, which is suffering from weak consumer demand, declining exports, and ailing property sector. 2 think tank scholars and 2 brokerage economists, all of whom serve as government advisors, said there was pressure to present economic news positively in order to increase the public confidence. The regulator doesn't want to hear negative comments about the economy in public, said an advisor to the central bank. They want us to interpret bad news from a positive light. So, when you view it through the lens of that, I am just shocked that Dong Lijuan, the chief statistician at the National Bureau of Statistics, would say that, oh, that's okay, the negative CPI and the D word that we can't say, it's just because of the base effect, and that's gradually fading, and I'm optimistic. Of course he's optimistic. He's got a gun to his head. Ladies and gentlemen, the Chinese Communist Party, and I just add, I mentioned a lot in some of my previous streams and some of my previous videos. It's so important that economic data be untainted by the infectious, noxious odor and the stink of politics. It's too important. There's too much riding on economic data. You can't let politics in. Once it gets in, it's very hard to get it out. We have this problem here in the States. See also all those revisions to the jobs numbers. See also our banks are strong and resilient, said Janet Yellen, and well capitalized. Yes, our strong and resilient banks. They're so strong and so resilient, they keep failing. That's how strong they are. And guys, I just want to mention, this story here about China banning negative economic commentary. Please follow me on Twitter at JG_nuke. There is links to my Twitter down below as well. Because if they're doing it in China, big tech here in the States is going to say, hold my beer. At some point, it's going to get so bad in the U.S. that censorship of economic commentary online will happen in the United States. And that is why it is very important that, as well as liking and subscribing here on YouTube, that you also follow me on Twitter, because one day I think it'll get bad enough that they start unplugging people who don't toe the party line about strong and resilient. And Twitter is the one place, for all its faults, there's plenty of bad things going on at Twitter. There's bots and there's scammers and there's all kinds of a mess over there. But for one place on the internet, they won't censor you over at Twitter. Don't think this can't happen here. It already does. And let's talk a little bit. Here's the actual data. This is China's inflation rate, the CPI, and you can see it's been falling all year. And there is your negative year over year, negative 0.3 for the month of July in Consumer Price Index in China. And also check out the PPI in China. This is Producer Price Index, and this one has been negative for a long time, negative 4.4%. Now, I'd add that's up slightly from the negative 5.4% last month, so maybe deflation has peaked in China, maybe not, at least in the producer prices, or this could be a dead cat bounce, and we have further downward spirals to go. But both producer prices and consumer prices lower in China. And let's not forget about Country Garden, guys. Country Garden is in danger of a default rivaling Evergrande. And Mish and I were having our morning conversation we have every day before we go live. We talk about what we've seen in markets. And we were wondering, Evergrande and Country Garden, which one is Bear Stearns and which one is Lehman Brothers, if you're making that analogy? Well, Evergrande had the bigger debt pile at $300 billion versus Country Garden's $200 billion of debt. But Country Garden is a much bigger outfit. Check out this quote, and this is why I've got this article up. This one quote here: any default would impact China's housing market more than Evergrande's collapse, as Country Garden has 4 times as many projects. That's according to Bloomberg intelligence analyst Christy Hung. 4 times as many projects as Evergrande. So not as much debt defaulting, not as much money going up in smoke, but look at all that economic activity lost. 4 times as many projects as Evergrande. That is a lot of cranes not moving. That's a lot of steel not getting bought. That's a lot of people not working. That's a lot of bills not getting paid. That's a lot of negative economic activity, shrinking GDP. This is why prices are going down, because this economic activity, this thirst for raw materials and construction activity in China, it's gone, and it's going to slow everything down. And Country Garden, guys, they owe 650,000 homes to people. 650,000 apartments that have already been bought and paid for by people and have not been built yet. And if they can't pay their bonds, they sure as heck can't pay their employees, or they can't pay their steel bills or the gas for their cranes and their bulldozers. I wonder if these things are ever even going to get built. And keep an eye on this one too, guys, because this affects oil. China's also been consuming a lot of oil to build all these cities. Now, yesterday, we had a really good bounce in oil prices. WTI crude right now. Look at the big wick here on this candle from yesterday. So oil sold off very hard on that bank downgrade yesterday and worries of the global economy slowing down. And even as the market bought up the bank stocks yesterday, the market also bought up oil futures. So oil, along with stocks, showed a lot of resilience yesterday after that initial panic and that initial sell-off. And now the price of WTI this morning, 83.86, it's actually above this high from April. But you know what, guys? If Country Garden goes under with 4 times as many construction projects as Evergrande, you have to wonder what's that going to do to oil demand. That's a lot of cranes that aren't going to run. Those cranes won't need gas. That's a lot of people that won't be driving to work. They won't need gas. That's a lot of steel that won't get smelted. You won't need as much, well, coal is usually used to smelt steel, but still lower energy demand, lower fuel prices. I have to wonder, and I still don't know, guys. Bull versus bear in oil. much like the discussion of inflation versus China deflation, which is the more powerful force. Within oil right now, there's so much up in the air, the uncertainty of supply, but the corresponding uncertainty of demand. I just can't tell you which way these prices are going to move, but I can tell you when one breaks, it's going to move bigly one direction or the other. Let's also talk about ZipRecruiter and that strong labor market. So much strong in the labor market. It's so strong that ZipRecruiter falls after pulling guidance on erratic job market. Wait a minute. Well, hold on. Stop. Back the truck up. Erratic job market? No. Someone didn't get the memo. Strong job market. Tight job market. Resilient job market. Soft landing job market. No recession job market. Where was erratic? What happened? I thought we were in the tree, in the nest. Everything was good, and we don't talk negative economic news. Where did this erraticism come from? Employers are increasingly unwilling to pay for job postings. ZipRecruiter sees a pullback across small and large companies. Man, this narrative shifted on a dime, didn't it? ZipRecruiter Inc. withdrew its annual earnings guidance due to atypical hiring patterns in the first half of the year, saying its customers are increasingly unwilling to pay for job postings, and it no longer has a view on when that will change. It's not a strong job market, not according to that statement. The recruitment company withdrew its full-year adjusted earnings before interest, taxes, depreciation, and amortization, their target of $178 million and $192 million, due to the rapidity and inconsistency of a cooling hiring environment. Again, where's the tightness? Where's the strong? Where's the resilient? Cooling hiring environment. Management said in a shareholder letter on Tuesday, it's also opted not to give full-year revenue guidance for a second consecutive quarter. The number of job openings and employers' willingness to pay for those job openings has been declining significantly from the peaks of 21 and 22, management said in the letter, adding that the pullback is widespread. Small, medium, and enterprise employers are all posting fewer jobs and spending less. There is no strong jobs market, guys. There just isn't one. And if you're still not convinced, well, how about from $40 billion to a going concern, WeWork warns of possible bankruptcy. This one just hit. This was just last night. WeWork, which is basically a fancy real estate trust, they were one of the signs of the post-pandemic boom. Well, they're done. They're out of here. WeWork said in a filing Tuesday that there's doubt about the company's ability to keep operating as a going concern. Again, going concern, you never want to hear that. That means that company is in trouble. The company's stock price has been trading below $1 since earlier this year. And let me just give you this quote here. The company had a net loss in the first half of the year of $700 million after losing $2.3 billion in 2022. As of June 30th, it had $205 million in cash and equivalents and total liquidity of $680 million. It has $2.91 billion in long-term debt. Guys, this company will be dead probably by the end of September. If they're already saying going concern, they only have $200 million left, and they're burning through $700 million in the first half of this year. On top of that, the situation in commercial real estate is getting worse, not better. This company will be done by the end of next month, mark my words. So there is your commercial real estate bubble. And I have to mention, guys, one more time, we are moving. We posted this on a poll, and you guys unanimously decided that the 9 a.m. time slot would be better than 9:30. So effective Monday of next week, we will be going live at 9 a.m. versus the 9:30. We'll stay with this time slot for the rest of this week, just so we don't shock the system. But Monday, we will be going live a little bit earlier. And I got to say some thank yous to Mr. Steve Woitis. He says, Jack, you let a rip on REM, Real Estate Mindset, yesterday. A must-watch for those who haven't. Thank you very much, Steve Woitis. I appreciate both the super chat and the kind words, sir. I went to see Travis at Real Estate Mindset on Saturday again. Fantastic host. Great show over there. Great channel. Check that one out. I posted a link to that in my community tab yesterday. You know, I zoned out in that interview, and I had to apologize to Travis. I ran almost 50 minutes. It was a very long interview. I apologize for the length. I had a text from my dad this morning saying it was a great video. You just ran too long. That was not on purpose. There's just so much data. It was a lot like we're talking about with ZipRecruiter here. It was all the reasons why I said the job market, the strong job market, is a myth. It's fake. The data doesn't support it. And it was 50 minutes of it because there is a mountain of data that supports that. And thank you very much again to Travis, and welcome to all you guys who came over from Real Estate Mindset. And by the way, I have another video. It's going to come out today or tomorrow. I'm not sure which. Travis and I also recorded a video about real estate for my channel, so look for that one in the next maybe the next day or two. I'm not sure when I'm going to get that one up. I have some editing to do, and I got a pretty busy day today. But thank you very much, Steve Woitis, for the super chat and for the kind words. And thank you, Getting Younger Every Day, for the generosity. No comment, just a swell super sticker. Thank you very much. I appreciate that very much. Let me make sure Getting Younger Every Day said, hit that like button, y'all. Well, thank you very much. This channel has to grow. Thank you so much for the support, the kind words, everything. Guys, I appreciate it very much. It really does. It's a good feeling to know that the work is being well received. I can't even call it work. I love this job. I can't wait to keep doing this. And Harry Truman, well, thank you, Mr. President. Indiana Jones there. He says the buck stops here. Actually, there's 2 bucks. Both bucks, they will stop here. You got it, Harry. Thank you very much. By the way, loved you in Oppenheimer, played by Mr. Gary Oldman. Mr. Truman made a cameo there in that movie. That was a pretty good one. Thank you very much, Harry Truman, for the kind words and for the buck stopping here. I appreciate that very much. And Dan Hedin is back in the house. He says to help with the tube deflation shadow banning. Well, you know, Dan Hedin, you may have noticed the subscriber count has started to move a little bit higher lately. I was definitely in algo purgatory for quite a while, especially after the banking crisis. Nobody wanted to hear bad news after the banking crisis, and the algo certainly did not want to put out bad news after the banking crisis. It looks like I have been granted algo parole because the channel's growing again. Welcome to all you new folks. Won't you please remember that like button? It really does help. And thank you very much, Dan Hedin, for being one of the OGs of this channel, sticking with us through the slump, through everything else, through Patreon as well. Thank you for your support there. And now for the super chat. I appreciate that very much. All right, guys, I want to say thank you very much to everybody. Thank you to my Patreon supporters like Dan Hedin. Looking forward to talking to you guys at 2 p.m. Eastern Time today for our weekly get-together over Zoom. We do that once a week. Link down below to the Patreon. Don't forget to check out that link also to the Stock Pulse Silver Symposium in Vegas, baby, Vegas. And hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.